Hello, everyone. My name is Yaman Tashtabat, and I bring you daily updates on Tesla, tech, and markets. Welcome to Tesla Live. Let's get started. Markets are mixed today. We're up about 0.5% on Apple, 0.1% on Nvidia. Nvidia is going to announce earnings. We're going to discuss earnings announcements in a little bit. Meta is up slightly. Tesla is down slightly. Overall markets are about flat. You can see utilities are down. Healthcare is down. Financials are mixed. So everybody's waiting for the Nvidia earnings. So let's get right into it with our daily article. Wall Street edges lower as markets await Nvidia earnings. Wall Street main indices fell slightly on Wednesday after a sharp rally in the previous session sparked by easing trade tensions as investors awaited AI bellwether Nvidia's results and minutes from the US Fed's last policy meeting. Nvidia is expected to report a 66.2% surge in first quarter revenue. And I wrote an article on Nvidia, an earnings preview article where I dug deep into the company, provided a discounted cash flow analysis as well, and reiterated my sell rating, explained my reasons around it. Highly recommend reading it. It's in the pinned post of my profile. Nvidia is expected to report a 66% surge in the first quarter revenue, according to data compiled by LSG. Shares of the chipmaker slid 0.2% ahead of its earnings due to be released after markets close. How AI demand plays out has far-reaching implications for the US market as we head into June, and many will be waiting to see today's report before doubling into May bounce risk, said Bob Savage, head of markets and microstrategy at BNY. Most mega cap and growth stocks had initial gains, were mostly flat. 10 of the 11 major sub-indices fell. All three main Wall Street indices soared in the last session after US President Trump backed down over the weekend from his 50% tariff threat. A poll of strategists and analysts conducted by Reuters showed that many market participants expected the benchmark index to finish the year near current levels. I don't think that's going to happen. Yields on US government bonds were slightly higher after scaling multi-month highs last week. Global bond markets have been in spotlight over concerns about fiscal sustainability in major economies, including the US and Japan. In earnings, Michael Kors owner Capri Holdings advanced 5% after its fourth quarter revenue beat estimates. Dick's Sporting Goods gained 1%. Cybersecurity firm Okta flagged risks related to uncertain economic environment, but stuck to its full year outlook. Shares dropped 14%. Declining issues outnumbered advances by 2.7 to 1 on NYSE, 2 to 1 on NASDAQ. Let's switch to Nvidia, dig a little deeper here. Lots of geopolitical risk ongoing in Nvidia stock right now. Lots of political, geopolitical risk, and we're going to dig into a little bit. And I'm going to play a clip in a little bit too. Just a quick overview. This article is from May 14, and I want to pay attention to the numbers here. US close to getting UAE import millions of NVIDIA chips, sources say. But what is not being said in these articles, so there's this rhetoric that the government demand is going to offset a potential decline in hyperscaler demand for NVIDIA's latest and the greatest GPUs. I don't know if that's going to be the case. I don't think that's going to be the case because I think governments will move way too slowly compared to hyperscalers. So even though these numbers are being thrown around, millions of NVIDIA AI chips, we'll see how quickly and if honestly, if that happens at all. But let's read a few more sentences from this Reuters article. US has a preliminary agreement with the UAE to allow it to import 500,000 of NVIDIA's most advanced AI chips per year, starting in 2025. Two sources familiar with the situation said, boosting Emirates' construction of data centers vital to developing AI models. The sources, who spoke on condition anonymity, said the agreement was at least through 2027, but there was a chance it could be in place until 2030. The draft deal called for 20% of the chips, or 100,000 of them per year, to go to UAE's tech firm G42, while the rest would be split among US companies with massive AI operations like Microsoft, Oracle, that might also seek to build data centers in UAE. So this word right here, might. It's a potential, it's less than 20% probability that either Microsoft or Oracle will indeed seek to build data centers in the US. So there's a lot of uncertainty, a lot still to be discussed. This is just a preliminary announcement. But on the other hand, hyperscalers are reducing their demand or at least slowing down their demand growth. And Microsoft obviously is canceling out some leases, data center leases already. So that's action. They said the agreement is still being negotiated, there you go, and could change before being finalized. One source said the deal, elements of which were first reported by the New York Times, faced growing opposition in the US government over the past day. The Biden administration issued restrictions on AI chips export to control the flow of the sophisticated processes worldwide, in part to keep the prized semiconductors from being diverted to China, where they could bolster Beijing's military. So lots and lots of concerns here. US President Donald Trump this week is on a tour. That was last week. So we're going to skip this. We got everything we needed from this article. I'm going to play this 30-second clip right here. People who helped Nvidia close out the deal with the Trump administration now feel blindsided. So this is still a very volatile up and down kind of situation. Maybe we'll get some more detail in today's earnings call, which I expect. I expect CEO to be extremely positive because what else would you expect a CEO to do about their company's prospects? But this volatility exists. Now let's dig a little bit more into the financials of the Nvidia. What specifically to watch today? Three things Nvidia investors should look out for in its earnings calls. This article is by Brian Sozzi. Nvidia will report its first quarter results for fiscal year 2026 after the market closed today. Wall Street is expecting AI chip darling to post another strong showing for earnings and revenue. Analysts forecast that earnings per share will jump 46% year over year to 88 cents. Revenue is expected to increase 66% to $43.3 billion. These are some sizzling growth numbers, though less sizzling than what Nvidia posted in 2024. I think this is the critical part right here, and also should be mentioned that earnings estimates by analysts have been coming down very rapidly throughout the last 3 months. I mean, I put out a DCF forecast 3 months ago with my sell rating, and I had to revise it down multiple times since then. Other analysts have done, and my estimates for this quarter are actually much higher than what the analyst consensus is. So, analyst community has come down much, much faster than my estimates. NVIDIA is the one chip fueling the AI revolution, and the stock is not expensive. According to this article, we see a $5 trillion market cap on the horizon for the Godfather AI Jensen, Dan Ives told Yahoo Finance. Nothing surprising there. NVIDIA's earnings report is about more than just the company, however. It's a bellwether for the AI boom, which is showing some signs of a slowdown. Not if you look at CoreWeave stock, but this time last year, Nvidia reported record quarterly revenue, up 262% year over year. Despite briefly becoming the world's most valuable company by market cap earlier this month, Nvidia shares have now down year to date. The pullback reflects investor anxiety about the pace of AI adoption and whether Nvidia can maintain its explosive growth. That's right. On the Q1 earnings call last year, co-founder CEO said the next industrial revolution has begun, blah, blah, blah. One, pay close attention to comments about AI demand and data center growth. NVIDIA's data center segment, driven by AI chips like H100 and its Blackwell platform, accounts for the lion's share of the revenue. Analysts will be listening for signals about cloud providers and hyperscalers like Amazon, Microsoft, and Google. So I discussed Microsoft's internal chip development efforts in my Seeking Alpha article, which you can find on my pin post. And I'll leave a link to the article in the comments of the YouTube video as well. I highly recommend reading the entire article. And Microsoft is making tremendous strides in internal chip development. They started out late. The first version of the chip wasn't that impressive, but the second version, the rumored specs that I discussed in the article, are actually very impressive. And they are pretty close to Blackwell. Two, keep an eye on comments about NVIDIA's gross profit margins, which are under pressure. Exactly. So revenue growth, and gross margin, which I think Nvidia is going to miss, especially on guidance on both. But we're going to find out in a couple of hours, and we'll see. I'm going to publish a follow-up article after the earnings call, hopefully tonight. Nvidia earnings topped forecast by 10% over the past 2 years, double the S&P 500 beat. Nvidia earnings and revenue beat Wall Street expectations nearly every quarter over the past 2 years. Over the past 8 quarters, Nvidia's earnings per share exceeded Wall Street's projections by an average of 9.8%. Over that same time frame, Nvidia's quarterly revenue beat the street by an average of 8.9%. Meanwhile, S&P 500 companies reported earnings and sales roughly 5% and 1.3% above expectations in that time frame. So the market is expecting this to continue. Expectations are high. We'll see if Nvidia can deliver. Stifel analysts and Bank of America's Vivek Arias expect that Nvidia's April quarterly results, fiscal 2026 first quarter, will show a modest beat. Okay. Everyone is focused on this H20 chips to China thing, but it's not really my primary concern. I think there's a lot of it's important to note that there's a lot of volatility, geopolitical risk, but I don't think Nvidia makes much money selling chips to China anyway, profit wise, and I don't think that's going to change in the future. So really, to me, it's more about the hyperscaler demand and what percent of the capital expenditures that Microsoft, Amazon, Google, Meta, OpenAI announce go to NVIDIA. And I think that percentage will decline over time. Wall Street analysts estimate that NVIDIA will report adjustment. We went over that already. We expect largely inline results, blah, 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 blah. Okay. Next. OpenAI CFO says new structure opens door for potential IPO. I think this is a hotly anticipated event. I think that OpenAI will go IPO, and CFO, if CFO is saying it, that is now very likely, and we'll see when it happens. It's an extremely fast-growing company. It is by far the leading company when it comes to LLMs, chatbots, and potentially other technology coming down the line as well. And maybe sometime this year or next year, I expect OpenAI to go IPO. OpenAI's restructuring plans position it for a potential future IPO, but any such decision would depend on the mood in public markets as well as the readiness of the company, CFO said on Wednesday. OpenAI, in which Microsoft has invested more than $13 billion, outlined plans in December to convert its for-profit arm into a public benefit corporation. A structure designed to balance shareholder returns with social goals, unlike nonprofits, which are solely focused on public good. The ChatGPT maker dialed back the plan earlier this month, giving the nonprofit parent control of the non-PBC through a big shareholding, while still allowing for the for-profit arm to raise more capital to keep pace in the AI race. A PBC gets us to an IPO bill event, if and when we want to. Okay. Nobody tweet in this room that Sarah Fryer just said anything about OpenAI ultimately going public. She added, I did not. I said it could happen. Okay. As what would influence a decision, Fryer said that as with any company planning to launch on the stock market, the company markets would have to be ready. You can't show up at the altar already go, etc. Which is why, let me see if there's anything else I want to to give a sense of the massive scale capital. That while a 1 gigawatt data center footprint costs about $50 billion, okay, so that's something we can take away. Fryer said that while a 1 gigawatt data center footprint costs about $50 billion, the company's appetite and ambition over the next couple of years was to get close to about 10 gigawatts. Next couple of years. That's not going to happen. I don't think that's going to happen. I know they have a project going on in Texas, but it's going to happen in stages. And you can't just willy-nilly bring 10 gigawatts to the grid. I don't think this is going to happen. Maybe by 2030. I guess we'll see. Fryer singled out the rapidly growing AI search market as a priority and said that while the company would seek efficiencies, its focus was on finding the next breakthrough product. The search market is becoming a big market, Fryer said. In that world, I don't really want people spending an inordinate amount of time trying to save an extra 1% when I would rather they went out and built the next state of the art product. Okay. There's a lot going on in the Bitcoin side of things as well. So let's look into that. GameStop is joining a number of companies buying Bitcoin. GameStop slides as company announces $500 million Bitcoin purchase. Slides, which is surprising. GameStop stock tanked more than 10% in early trading on Wednesday after the video gamer announced it purchased 4,710 Bitcoin. With Bitcoin trading around $108,000 per token, the investment is valued over $500 million. The token reached a record high of north of $111,000 last week. In March, the company, led by billionaire Ryan Cohen, formally announced that its board unanimously approved adding cryptocurrency as a treasury reserve asset. Subsequently, the meme stock tumbled nearly 25% in one session after the retailer said it intended to raise $1.3 billion via convertible senior notes to purchase Bitcoin. Public companies have increasingly added Bitcoin to their balance sheets, following the lead of strategy formula MicroStrategy, the largest corporate holder of Bitcoin. On Tuesday, Trump Media and Technology Group DJT unveiled plans to raise $2.5 billion to create what it claims will be one of the largest Bitcoin treasuries held by any public company. Shares of Trump Media, which are majority owned by President Trump, fell over 10% following the announcement. So this is quite interesting. We used to have situations where when companies announce Bitcoin purchases or intend to do so, their stock price would surge. But now we have two examples at least. Trump Media Technology Group, majority owned by President Trump, which is really interesting to me, and GameStop announced Bitcoin purchases and their stocks fell. Bernstein analyst Gautam Chugani points to increasing corporate adoption of Bitcoin as a bullish sign for the token. Globally, 80 corporates have adopted the Bitcoin standard, adding BTC to their treasuries and now holding approximately 3.4% of the total supply. That amounts to roughly 720,000 tokens, up 160% from the 270,000 held at the end of 2023. Bernstein forecasts that Bitcoin will reach 200,000 by year end. Let me see if there's anything new here. I don't see anything. Okay. I was really excited about Cybercloud, I guess. Tesla. Um, Actually, we leave that to the last. Let's switch to this one. Why wrench attacks on wealthy crypto holders are on the rise. This was a pretty interesting story that I want to kind of check into um, to see what the fuck is going on. The headline grabbing tale, what the heck is going on? The headline grabbing tale of an Italian man who said he was kidnapped and tortured for weeks inside an upscale Manhattan townhouse by captors seeking his Bitcoin highlights a dark corner of the cryptocurrency world: the threat of violence by thieves seeking digital assets. The alleged attempted robbery is known as a wrench attack. It's a name popularized by an online comic that mocked how easily high-tech security can be undone by hitting someone with a wrench until they give up passwords. Wrench attacks are on the rise, thanks in part to cryptocurrency's move into mainstream finance, Phil Aris of the crypto tracing firm TRM Labs said in a recent blog post. Criminal groups already comfortable with using violence to achieve their goals were always likely to migrate to crypto. Some of the crypto's key characteristics help explain why wealthy individuals who hold a lot of digital assets can be a ripe targets for such attacks. Cryptocurrencies like Bitcoin offer traders full control of their funds without the need for a bank or permission from a government to buy, sell, or hold it. The trade-off is that if funds are lost or stolen, there can be no way of getting them back. Self-reliance is a key ethos of crypto. Securing and controlling one's private keys, which are like passwords used to access crypto holdings, is viewed as sacrosanct among many of the crypto community. A popular motto is not your keys, not your coins. Transactions on the blockchain, the technology that powers cryptocurrencies, are permanent. And unlike cash, jewelry, gold, or other items of value, thieves don't need to carry around stolen crypto. With a few clicks, huge amounts of wealth can be transferred from one address to another. In the case of New York, where two people have been charged, a lot of details have yet to come out, including the value of the Bitcoin the victim possessed. Stealing cryptocurrency is almost as old as cryptocurrency itself, but it's usually done by hacking. North Korean state hackers alone are believed to have stolen billions of dollars worth of crypto in recent years. In response to the threat of hacking, holders of a large amount of crypto often try and keep their private keys off the internet and stored in what's called cold wallets. Used properly, such wallets can defeat even the most sophisticated and determined hackers. But they can't defeat thieves who force a victim to give up their password to access their wallets and move money. The case in New York is the latest in a string of high profile ranch attacks. Several have taken place in France, where thieves cut off a crypto executive's finger. Yeah. Wild, wild. All right. The only Tesla news of the day that I want to focus on is out of China. China auto market price war stokes fears of industry shakeout. An intensifying auto industry price war in China has stoked fears of a long anticipated shakeout in the world's largest car market. Shares of China's largest automakers sank Monday after Chinese EV giant BYD offered fresh discounts across more than a dozen models, and an executive at another car company fretted openly about the country's deepening price war. BYD's moves cut the starting price of its cheapest model, the battery-powered Seagull hatchback, to $7,765 from nearly $10,000. The BYD price cuts, along with other developments, signal a potential tipping point where weaker players can no longer sustain deepening losses from the downward spiral of prices, said Tu Lei, managing director of Sino Auto Insights, an advisory firm. This points to a bloodbath later this year, he said. This could be the first domino that would finally put pressure on weaker players, startups like Neta and Polestar that have been teetering. On Friday, the chairman of Great Wall Motors, Wei Jianjun, warned that China's auto sector was in an unhealthy state, with pricing pressure hammering the bottom lines of car companies and suppliers. He even drew a parallel to Evergrande, the Chinese property developer that was liquidated last year after a major debt crisis. Now, Evergrande in the automobile industry already exists, but it has not collapsed, he told Sina Finance in an interview. In another sign of stress in the market, Reuters reported that Chinese commerce regulators are examining a growing phenomenon that has also strained the industry. Sales of used cars that are essentially new cars with 0 miles. The tactic is seen as a way for automakers and dealers to hit aggressive sales targets, a person familiar with the matter told Reuters. A slew of startups companies have piled into China's car market over the past decade, drawn by a burgeoning electric vehicle sector. The market has grown crowded with cutthroat price competition, and most companies sustaining heavy losses. Of the 169 automakers operating in China today, more than half have less than 0.1% market share, according to data from research firm Jada Dynamics. So that's about 85 companies, less than half, less than 0.1% market share. The crowded field is reminiscent of the US auto sector in the early 20th century, when more than 100 companies viewed with big players such as Ford before the industry consolidated. Le said the price war has lasted roughly 3 years. The car makers once enjoyed a premium for advanced features such as driver assistance systems that take control of the steering and braking in certain situations, but now more have been offering these as part of the sticker price. I think this is a critical point that Tesla investors ignore. Some of these automated driving features that rival FSD in some cases are included for free in the sticker price. Last week, China's state planner cautioned that competition in some industries was getting too heated, with some companies even selling their cars below cost, disrupting fair competition. On Friday, Wei, the Great Wall chairman, warned the prolonged price war was harming the automotive supply chain. Some suppliers are at risk of going under because of pressure from car companies to lower their prices. Some products have been reduced from 220,000 yuan to 120,000 yuan in the past few years, he said, without naming companies. What kind of industrial products can be reduced 100,000 yuan and still have quality assurance? I guess we will see. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.